settled in, get those cameras going. We'll get started top of the hour. And good to see you all. So again, if you're just joining us or coming back, let's go ahead and get settled in, get our cameras going. I'll officially kick us off here at, I'm out on the West Coast, Pacific time, so 7 o'clock my time, but whatever time you're at, we'll start here in about a minute. Seeing a few West Coast folks. It's awesome. Okay, well, hey, we are at time. Let me give you an official welcome to New Rep Training. My name is Rob Godfrey. I'll be one of the trainers with you this week. Really excited to be here. Just a quick, I'll give you a little more of my background in a minute, but just a quick mention. I've spent a long time here at Country, but the most exciting part is I've been in your shoes. I've been out there in the field and been where you're at, and that's why doing New Rep Training is always a treat for me, because I know the excitement and all the things you're feeling as you start your career off here with Country Financial. So thank you for that. Thanks for letting me be a part of the journey. And I'm joined by Kim Aker. We're running personalized underwriting today. I'll talk to you more about what we have in store here in a minute. But Kim, if you want to go ahead and give a quick welcome and walk through some housekeeping before we officially kick off.
Thank you, Rob. Thank you. Hi, everyone. I am Kim Aker with Agency Training, and I'm very excited to be here with you today. Prior to coming to training, I was in your shoes as an agency owner with Country Financial for several years. So very excited to be here on the training side to help you get started as an agent here at Country. So I'm going to go ahead and just walk us through a couple things today to help us kind of get started with what we expect to have for these next few weeks as we go through your New Rep Training experience. So a couple things here. I want you to be a good teammate. And what I mean by that is we're going to do our part to create a really good learning environment for ourselves and for each other. How we do that is by minimizing distractions. So we could go ahead and put our cell phones on silent. Another thing you could do is make sure that your microphone is muted at all times. One of our colleagues loves to put herself on to do not disturb for your status here on Teams. That way, if you get a phone call or an IM directly, that won't interrupt you, and you can just be here with us at all times. As you can see, I'm using a headset today. So if you are in an area where there might be some other noise that you don't really want to be interrupting you or in the background of when you're speaking, go ahead and use a headset with a microphone if possible. Be aware of your background, whether it's in New Rep Training or any time that you are on Teams with a client or with a colleague. This is going to help you to just make sure that you are professional at all times, that there's nothing distracting going on behind you. Speaking of, make sure that you are seated in an area that's not with a bright light source behind you. So like a window or anything like that could be kind of distracting and, kind of create that silhouette look for you where we can't see your face. We would ask that you take all precautions to avoid that unexpected visitor in your space. So whether you have animals or children or a co-working space, just go ahead and make sure you separate yourself behind a closed door or an environment where you can be a good learner with us. Part of learning is staying engaged and participating. So we would ask today that you do talk with us, ask questions, share ideas. So Rob and I are here to kind of guide the conversation and bring up concepts with you, but we don't want to talk at you, we want to talk with you. So we would ask and encourage you to raise your hand or use the chat if you have a question and you want to participate, or if you have some feedback or a thought as part of our discussion. We would also prompt you with questions from time to time. So go ahead and keep that chat open at all times. We would ask that you do speak clearly and concisely, whether that's in writing or when you have your hand raised and you're talking with us. Try not to speak over others, which I really don't think is going to be an issue here. I can see it's going to be a great class. A couple more notes I have for you would be, if you are not familiar with Microsoft Teams, I just want to highlight these icons on the top of your screen here. You're going to see that we do have the chat button there. That's what I've asked you to keep open at all times. Next to that, you see the raised hand icon. That is going to look a little bit like this. So when you have to raise your hand there, you're going to see you get assigned a number. So that's going to help us keep track of who raised their hand first, especially when we're asking a question and looking for participation. That reaction is another great way to participate with us. So go ahead and click that right now. You're going to see a few options of which you can react to something. So if you hear something that you really love, drop that heart. Okay. If you want to applaud someone for some feedback or a thought that you thought was fantastic, you can go ahead and do that as well. So thank you guys all. I see people jumping in here with their favorite reactions. I appreciate that. Next thing I want to highlight, this should not be new to you, with that camera and that microphone, a couple things. That camera that you see here on screen has got a slash through it. That means that camera's not working right now. So you're going to want to make sure that your camera is illuminated without that slash through it at all times to mean that your camera is on. On the inverse, that microphone right there does not have a slash through it, which means that microphone is on. We want to just be very cautious that you are muted at all times unless you intend to speak. So go ahead and make sure that your microphone right now has that slash right through it. And when you go in and out of breakout rooms through your new rep training experience, you're going to find that sometimes that microphone comes back on or it does its own thing. So you're going to want to make sure that as you get situated in your rooms that you're always camera on, microphone muted until you are speaking. Okay, last but certainly not least, let's talk about attendance. So during these sessions, you're going to be expected to participate and be on with us for the entire duration of the session from start to finish. So the system itself tracks your attendance. It knows when you've logged in. It knows when you leave. It's not Rob, it's not me or Ryan policing this. This is the system itself. So really important that you let us know if anything is going on with your technology that's going to interrupt your time in the session, because you will not get credit for the course that you're taking if you miss more than 10 minutes. So again, if you are within the session, we want you to be here for the entire class with us. If you have other things coming up where you know you're going to have to leave early or hop off, take a phone call, we would just ask that you are proactive in trying to schedule. There's often opportunities to take the course at a different time. So if you know coming up tomorrow or next week, there's a session that you are going to be interrupted in, I would just ask that you work with us to get enrolled into another session later on this month so you can get that full credit, because we do expect you to be on for the entire start to finish of the class. I'm going to hand things over to Ryan Nicholson. We are very excited he's with us today. He's my manager and the supervisor of agency training. So Ryan's going to take you through some great introduction things to know about your new rep experience here. Ryan, the floor is yours.
Good morning, everyone. Rob, Kim, thank you so much for getting things kicked off here this morning. As Kim mentioned, my name is Ryan Nicholson, and I am the supervisor of agency training. So what that means is I get to work every day with your fantastic group of agency trainers that you're going to get to know very well. First and foremost, a couple of things. If you are a rep and you contracted on June 1st, I wanted to say congratulations. What just an amazing and fantastic step that you are taking in being a business owner. And I also wanted to say, welcome to Country Financial. We are so excited that you are here. If you are an associate agent, if you are an assistant, or maybe you're an existing agent that's joining today's session, I also wanted to say welcome to all of you. We're very glad that you decided to take that step in your development and join us for this morning. So I don't want to take up too much of your time, but I did want to join you all for just a few minutes to share some things that you can all expect as you move through the new rep training program, as well as outlining some resources that you can utilize throughout your time taking the new rep training courses and joining these virtual instructor-led sessions. I always want to start with, and I already mentioned, your fantastic group of agency trainers that you're going to be working with throughout the new rep training program. So when you hop into the team session, these virtual sessions, you're going to be joined always by two agency trainers. Those HC trainers are not going to be the same week by week. So for example, this week you'll have Kim and Rob joining you for these virtual sessions, and next week you'll have a couple of different trainers. But all of our agency trainers, they are very passionate about a couple of things. Number one, making sure that you all get off to a fast start in your careers and your production. But also they're super passionate about making sure that you all have the best training experience possible. So I encourage all of you to utilize that time with your agency trainers to ask them questions. So maybe you are taking a web-based training and a question comes up, write that question down, bring it to these Teams meetings, ask your trainers. We also will have some subject matter experts that will be joining you throughout your new rep training. Ask those subject matter experts those questions. That's why we have these live virtual sessions. And I guarantee you, if you have a question, one of your peers is probably going to be having that same question. So not only are you helping yourself, but you're going to be helping your peers as well. You do have access to your trainers outside of the four walls of these Teams meetings. So if you want to ask them a question outside of these meetings, you can send them an email, you can send them an instant message over Teams. They're going to be happy to assist you. Okay, so that's one resource. The other resource I wanted to talk about was your support specialist. So each of you have a support specialist that is aligned to your market. And you all should have received an email from that support specialist on the first day that you contracted, welcoming you to country, welcoming you to new rep training, as well as outlining some resources within that email that you can utilize throughout your time going through the new rep training program. Your support specialist, they're going to be a fantastic resource when it comes to questions that you have about the courses in new rep training. So what do I mean by that? Well, I said a little bit ago, you're going to be taking those web-based trainings. Maybe you have a question about the link. Maybe the link isn't working, or you know that you have to take a course and for whatever reason in the PDC, you're not finding that. Reach out to your support specialist. They're going to be able to help you. Maybe you have a question about the invites that is on your Outlook calendar to get into these Teams meetings. You're not seeing it on your calendar. You know that should be in a meeting, but you're not seeing it on your Outlook calendar. Reach out to your support specialist. They'll be able to help you with questions like that. Maybe you are tracking along and you're keeping track of how you're completing and moving along the program, and you're looking and you say, well, hey, I thought I completed that course, but I'm not seeing that I'm getting credit for it. A question like that, go to your support specialist. Again, they're going to be very happy to assist you with things like that. So utilize that resource in your support specialist. Now, our hope for all of you that contracted as a rep on the first of the month is that you complete the training in 30 days. But what's great about the new rep training program is it was designed to be flexible and meet the different needs that our contracted reps have. So although our goal is that you complete it in 30 days, keep in mind that you have 100 days to complete the program itself and still receive credit. So maybe you don't want to focus on training the first month as maybe one of your peers does, and you want to focus more on production activities. Perfectly okay. You can sprinkle those trainings over 100 days, and if you complete it within those 100 days, you'll still receive credit. So again, it was designed to be flexible to meet the different needs that all of you have. All right, so the last resource I wanted to show you is actually out on a SharePoint. And you are all going to get very familiar with SharePoints here at Country Financial, but I'm going to share my screen. We're going to take a little bit of a field trip here. And I'm going to take you out to agency news. So Kim or Rob, if you could just give me a, hey, Ryan, we can see your screen, that would be fantastic.
Hey, Ryan, we can see your screen.
Yes.
Good to go, Kim?
Kim, I'm seeing a split screen real quick. Are you seeing that same thing?
I am. That is.
Maybe take me out spotlight.
Okay, I'll take it. I will remove your spotlight, sir. Second.
Kim, I'm going to exit spotlight on my end too, just to be safe, and we can pop back on.
Okay, that sounds good.
All right, how are we doing now? There we go.
Perfect.
That's good.
Look a little better. All
Oh,
right,
yeah.
so here we are, everyone, out on a site called Agency News. And when you all open up one of your browsers, whether that is Microsoft Edge or Google Chrome, it should take you right out onto this page called Agency News. If you haven't been on to Agency News yet and explored it, I highly encourage you to take a few minutes at some point this week to familiarize yourself with this site. This site was created to provide you the most pertinent and up-to-date information that is impacting you as well as your client. So as you can see here, it is up daily, sometimes a couple of times each day. But again, it provides you the most pertinent and up-to-date information that's going to be impacting you and really how you are servicing your clients, okay? For today, I wanted to take you up at the top here where it says agency resources. Now, unfortunately, I don't have a tremendous amount of time to go through all of these different resources that are available to you. But as you can see, we have it in different buckets. We've organized by different buckets. You can see we have recruiting there. We have resources around systems, agency training and learning, marketing, production, financial services, the sales growth toolbox that you can see there on the far right-hand side. So again, some point this week or even next week or throughout the next 30 days, 30 to 45 days, take some time to familiarize yourself with some of these resources. Today, I want to focus on agency training and learning, specifically the Level Up site. Now I'm going to click on Level Up. Don't worry if you're worrying, hey, Ryan, how do I navigate back to Level Up? I'm going to put some links in the chat box so you can access this directly at some point to make it easy for you. But this Level Up site was created a couple of years ago to make it really easy for all of you, our field partners, to go to one central location and easily find different trainings that are available to you. So you can see up at the top here, I hovered over course filters. Well, we have different trainings available, organized by all of the different business lines. So let's say you've completed new rep training, and after new rep training, you wanted some additional training, maybe some more advanced training around our commercial line. If you click here on commercial, it's going to pull up all of the different trainings that we have available for commercial. So again, we've tried to make it as easy as possible for you all to go out to one location and really easily find the trainings that you need to continue your development throughout your career. I know that's a shocker. Development doesn't end after new rep training. Development is going to be ongoing. So we want to make sure that we're able to easily assist you with that development. We also have it organized, you can see a little bit further to the right, by learning path. So all of these different headings here are categorized by learning path. I'm not going to spend too much time diving into those because today we want to focus on new rep training program. Okay, so I'm going to click here on new rep training program. If you haven't seen this page, this is a fantastic page to provide you all an overview of what the program is all about. So
close the door, Sally.
we have all the 6 curriculums that make up our new rep training program: compliance, country overview, business planning, marketing, sales and review, and then the big one being product basics. So we have links to all those different courses here. And then if you scroll down a little bit further, we have answers to some frequently asked questions that we've received from new reps or associate agents or assistants that have joined the program throughout the years. For today, we're going to go up here to the top where it says paths: morning path, afternoon path. If you are a rep and you contracted on June 1st, you were enrolled in either the morning path or the afternoon path. So maybe you had a conversation with your district leader and your district leader said, hey, what works best for you? Morning path or afternoon path. And you said, well, hey, you know what? I want to get all my training done in the morning. So let's join those live virtual sessions at 9 a.m. Central Standard Time versus the afternoon path
On camera.
where folks are joining us at 1 p.m. Central Standard Time. That's the only difference between the two paths. Both paths, the courses are offered in a different cadence. So if you wanted to maybe expedite your training or you wanted to take some courses in the afternoon, you're more than welcome to enroll in those courses. So because you are, for the most part, all enrolled in the morning path, let me click here where it says morning path and show you all how you can use this as a resource as you move throughout the new rep training program. So here we are on the morning path page. And we have things broken down by week 1, week 2, week 3, and week 4. Remember a little bit ago, I said the program was designed to be completed in 30 days. So that's why we have it broken down into those 4 weeks. Rob, I see that you have your hand raised.
Yeah, Ryan, hate to jump in here. Just want to take a quick minute. Ari and either Mickey or Mikey, sorry, I'm thinking Mikey there, getting a little choppy audio. So I just want to take a moment here. If you guys can give me a shout in the chat, because it's coming through clear for me, Ryan. Give me a shout in the chat if Ryan's coming through clear on your audio. So that way we can figure out if it's on their end or on Ryan's end. So is Ryan coming through clear? You hearing me okay? Okay. All right. So Ryan, go ahead and keep pushing through. It looks like a lot of people saying it's clear. And for the few folks that said it's choppy a little bit, let's hang tight and see if it works its way through. Back over to you, Ryan.
All right. Thank you, Rob. So here we are, week 1, week 2, week 3, week 4. Like I said, that's how the program was designed to be completed in those 4 weeks. So if I click on one of these, week 1, it's going to bring me down here where it's a morning path, week 1. This green shaded area. These are all web-based trainings that we have listed that we're recommending you take within that first week of being enrolled in the morning path. Right here on the left-hand side, it says session pre-work. These sessions we're recommending you take before logging into these virtual instructor-led trainings because it's going to provide you a nice foundation and really build off the conversation that you're going to be having with your trainers and your subject matter experts. And then over here on the right-hand side, for the most part, all of these also align with personal lines, auto, and property. What's great is that you can see they are hyperlinked. So not only can you access these web-based trainings directly through the PDC, which a lot of you probably already have started doing that, taking the web-based trainings directly through the PDC, you can also take these and enter them directly through this page right here. So if I clicked up at the top on this link Driver IQ, it's going to take me to that web-based training right there. So that's what's aligned to the green shaded area here. And then down in this gray shaded area are the virtual instructor-led training sessions that you have scheduled on your Outlook calendar for the week. So today, Wednesday at 9 o'clock, you have personal lines underwriting. And then tomorrow at 9 o'clock Central, you have personal lines sales and quoting. Now this is hyperlinked, but I do want to make a note. If I clicked on this, it's not going to get me into the team session. It will allow me to enroll in the session so that I can receive an invite that lives on my Outlook calendar. And the only way that I'll be able to get into the session is through that invite that's on my calendar. So a little bit of a difference there in terms of the links in the green shaded area and the gray shaded area. And then we just rinse and repeat, right? For week 2, same thing. You have all your web-based trainings here that we're recommending you take in alignment with your virtual instructor-led sessions there that are scheduled on your Outlook calendar for that week. And then week 3, and then week 4. Now we do have a really nice resource that makes it easy for all of you to keep track of how you're progressing. So let's say I contracted on June 1st and I'm really aggressive with my training and I want to complete in 30 days. So if it's me, Ryan Nicholson, I'm going to use this resource that is a nice, just kind of a one sheet is how I would describe it. And it provides all the courses broken down each day, as well as those self-paced training and activities we're recommending you take that week. So then by the end of the week, if I have everything checked off, that's telling me that I'm on pace to complete within my goal of 30 days, right? So again, we have week 2, week 3, and week 4. If you're anything like me, and you still live maybe in the early 2000s, the 1990s, and you like to use paper, you can print this out and you can just manually use this as a checklist, right? So you have it on your desk and you're just checking it off on that box as you move through the program. All right, so I know that was a lot of information. I'm going to pause before I stop sharing my screen. Does anybody have any questions about those resources I just ran through?
Ryan, let's pause for a minute for my folks that were having a little bit of a choppy audio. Anything you want Ryan to touch back on or go back over on, go ahead and give us a raised hand. Okay, Ryan, I'm not seeing anything on our end, and we were just working through some tech issues in the chat, so that's the main thing that came through.
All right. Thank you, Rob. And I know sometimes the first day of new rep training, running into some technical problems. So your trainers are there to help you through that, and we'll get you all situated. Just some of those first day bumps that we'll have to overcome. Steven, I see that you have your hand raised. If you had a question, go ahead.
Steven, you might be on mute. Go ahead and hit that little mic button on the very top to unmute. I know you're having camera issues.
Yes.
Okay.
Yes, I was wondering, they said if you can raise your hand, if you can please re-elaborate over what you just went over, would be greatly appreciated.
Is there anything specifically, Steven, you wanted me to go over?
No, mine was cut out, quite frank with you. I don't want to delay time already because we're gonna be on here for a while, but I didn't hear any of it, to be quite frank with you.
Okay. Tell you what,
Yeah.
Steven, I can take you up on a one-on-one where I can walk you through this just so we can keep moving along with the session and save time. So I'll shoot you an IM. And if you want to take me up on that, I'm happy to spend a few minutes going through that again. Does that work?
Yes, sir. Thank you, Ryan. Appreciate it.
All right, you got it. Okay, just one last thing before I turn it back over to Kim and Rob, and I know we have Charles here from Underwriting as our subject matter expert. I did want to address the importance of being professional while you're joining these live virtual sessions. So not only do we have you, the rep, joining us, and associate agents and assistants and existing reps, but we'll also have some leaders throughout the company joining us, as well as I mentioned already, some subject matter experts. So just be cautious of what you're putting in the chat box. Make sure it's professional. We want to have fun and we want to make this engaged, but just keep things professional in the chat box, as well as what you're saying when you're unmuting your line. And I know this is everyone's favorite topic, dress code. Yes, we do have a dress code for when you're entering these sessions. That dress code is business casual. That could be a plethora of different things. I'm not going to go through all of those things that we would consider business casual, but 3 things that we ask you to stay away from. One would be just a plain tee or a graphic t-shirt. Second would be a hooded sweatshirt or a hoodie. And the third would be a ball cap. So if you stay away from those 3 things, you should be good to go. If you're not aligned with that today, no worries. Understand it's the first day, but as you continue to join these sessions, just try your best to be in alignment with our dress code. All right, that's it for me. If you need anything at all, yes, Ari, country attire sweater is fantastic. Any country branded clothing is perfectly acceptable. Great question there, Ari. If you need anything from me, please do not hesitate to reach out. I'm going to put my email address there in the chat box. Please don't be a stranger. I'll also put that link to the new rep training page that I just walked through. Steven, I'll send you an IM on the side, and want to take me up on that. I'm happy to do that. Thanks, everyone. Have a great rest of your day. Rob, Kim, back to you.
Hey, thanks, Ryan, for that. Let's give Ryan a hand for coming in and helping kick things off. Okay, and hey, I know, gang, it's the first day, so if we are running into any technical issues, we'll just kind of work through those. I mean, you know how it is. And I would say just a couple best practices. If you do run into some technical issue, you have to log off and log back on. Let Kim or I know so we can make a note of that. The other thing, too, is when you do log on, probably best to make sure you don't have a bunch of other things open on your laptop. That way, Teams is running full force. And hopefully you're minimizing some of the issues that can come up. I know it can happen from time to time. I run across it occasionally. So hopefully we'll be able to work through that. So Stacy and a few others, I saw your comments. So let's see how that goes in the next, few minutes here. If it's still having an issue on break, can log off, log back on, try to work through that, and then do some of the things that I mentioned just a moment ago. So go ahead, give me a thumbs up reaction, everyone. Are you all with me? Am I still coming through okay on the audio? And we're ready to jump into this thing. All right, Kim, they're already using the full reactions and everything. I think we're good. We got a great day lined up. Yeah, absolutely. We had a great day lined up, and Charles will be brought in here in a little bit when we bring in our underwriter. So I'll have him introduce himself here in a bit. Before we get to that, there are a couple things I want to touch on. First being some of the things that we'll cover today, and I want to talk through, really what your role is on that first point, excelling as frontline underwriters. So hang with me on that one for a moment. I'll talk about that because really you all are out there doing the good work in your communities. And it's not just writing business, but writing good quality business and being that frontline underwriter. Talk about minimizing some errors, and then we'll get into the product a little bit. We're going to really chunk the product out in a couple different ways. We'll walk through the auto parts first. So the auto components of our product first, some of the competitive advantages, and then we'll get through and start the second half with home. And that's where Kim will take over with Charles and walk through the home insurance, and then we'll wrap up with some resources and things that we'll touch on. So great day lined up. And as Kim and I said a little earlier, we've all started in your shoes. I'm really excited here to be with you as you start your journey here at Country Financial. So I want to start with the question, and I want to start with this phrase. When you think about, we all win with profitable, sustainable growth. Think about that as a company, as you as an individual, and as a client, and your clients. What comes to mind? Go ahead and throw that in the chat. We all win with profitable, sustainable growth. Take a moment. What are some words or why? What does that mean to you? All right, Jimmy, I'm going to have you come off mute here. Thanks for calling in. First caller, Jimmy, you said team. Tell us what you're thinking.
Should see as the
Jimmy, you might be on mute, so double check the mute button. That'll be the little mic on the top.
that's oh, there it is. Okay, there it is. Just we can't do it alone. I mean, I don't want to be on this learning curve trying to figure it out. I just want to get on the wheel and learn the country way and learn from everybody else. I mean, you guys have been here, so I don't want to. If I can shorten my learning curve and help others in the process, by all means. I mean, we're all coming in at different levels and skill levels to learn, and I'm a newbie in this industry, so I'm going to try to be like a sponge and soak up as much as I can.
Yeah, I love that, Jimmy. And I think you're not alone in coming in. We get a lot of people coming in new to the industry, with folks with experience, and a mix of the two. And you're in the right spot. A lot of stuff we'll share with you. And if we can shorten that learning curve, we can't minimize, we can't erase it, right? There's always a learning curve, but if we can shorten it and get you up to speed running as quickly as possible, that's a win. So love that, Jimmy. Thank you for hopping in and sharing. I'm going to jump over. We got one more comment. So Beretta, tell me if I'm saying your name incorrectly or if it's correct. You said customers, agent benefit from success. Talk to us about that.
When the company's doing well, then obviously rates and things hopefully would go down or not increase. So when the agent in the office does well, then hopefully in turn that relates to the customer as well.
Yeah, love that, right? It's all kind of synced up, two sides to the same coin. So love that there. Nice work, Beretta. And I'm just going to spot hit a few others here, gang, just so we can move along. Vincent, I love the adaptability, right? As a company, staying nimble, right? And change is inevitable. It's always going to happen, especially in our industry. So the adaptability, we're all working together, is huge. Bill builds a solid foundation that makes us appealing to the public. And Kim, sustainable makes me think long-term or retention. Yeah, I love that. So the way I look at it, gang, when I think about, this first part of today, think about it like a triangle. It's not necessarily in order of 1, 2, 3. I'm just throwing these out there top of mind. But think about it, if it's good for you, it's good for the client, it's good for the company. It's all a win-win-win. Would you all agree with me on that? Give me a thumbs up reaction. Good for the company, good for you, good for the client. Exactly, right? And so when you're out there thinking about that, and what you're right, you play a very, very important part of this. And a lot of this really starts with, and for those of you in the industry, hang with me for a little bit, because I want to make sure the newer folks or the folks that are newer to the industry, everyone's new on the call, the country, but newer to the industry, understand a little bit about what we're talking about here at Country. So win-win-win. It all starts with a solid foundation of the way the company is built. So understanding risk pooling is key. And really, to simply put this, any insurance company, right? The whole point of it is hey, you bring enough clients in that pay a small amount of premium, when that catastrophic loss hits certain people, there's enough money to pay out claims. You all with me on that? Right? So kind of that risk pooling, large number to be able, because there are things here, if you look at this point here, balancing high and low risk. As a client, I go to an insurance company because I don't want to take on maybe some of that high catastrophic loss. I want to self-insure that. I can transfer it to the company. And then come claims time, they go ahead and cover that if that happens. I might take on some of the lower risk, maybe a higher deductible. I can cover the first $1,000, whatever it is. So really risk pooling allows clients the balance of that. And if you think about it, I made a note here, a few months back that stood out to me. If we didn't have insurance or the ability to insure, everything will come to a halt. Think about what insurance touches, not just in the P&C side or the life side. Think about all the business insurance and all the things that have to go into place for business and just our society to function and be able to move and function normal, right? So insurance is huge. That risk pooling is key, and it gives clients the opportunity to balance out their high risk versus the low risk, things they want to retain versus the things they want to transfer. In addition to, of course, those legal requirements like car insurance and stuff like that, right? We all know that most people on the road, hopefully have insurance, but some still, don't. But for the most part, it is a legal requirement, and that's something that has to be offered. So some of this stuff starts with that underwriting process. So we've got a company, a country, right, where we offer the insurance piece. We've got, the foundation there. Now we've got to have a process to start bringing people in. And a lot of that comes with the way we build the products, the policy pricing, the different rating variables. When you get into the system, you're going to see different things that impact rates and stuff like that. And the bottom line is, right, all the way down here, profitability management, claims prediction. It allows the company, when you kind of pop open the hood of the car and you're looking at how it's built, to be able to bring clients in, like the right premium for the right risk, so we stay profitable and be able to back the promises that we make to clients. Y'all with me on that? Pretty simple there? Okay. So where does all this start? Well, it starts with you all, like I said, out in the field. Now, when I say reps as the first line underwriter, anybody want to come up? Give me a raised hand. What are some things that come to mind? When I say reps as first line underwriters, I know technically you're not underwriter per se, like, Charles would be coming in here a little bit, but there is some truth to you being the first line underwriter. All right, go ahead.
Can you guys hear me?
Yep.
Okay, so I think we collect all the information needed to form the application so that we can properly assess the risk.
Yeah, I love that, Ari. Great, well said. And I'll give kind of a summary recap in a minute. We've got a lot of hands that are raised, but Ari, nice work. Giving you a virtual high five. Thank you. Jumping over to Adam. Adam, you're on the call with Kim and Rob. Go.
Yeah, just generally knowing what kind of people you're looking for. You don't want to necessarily be bringing in the person for auto insurance who has 3 DUIs. Looking out for the right kind of clientele and not bringing in someone who's going to end up being a liability company.
Yeah, absolutely. And somebody like that might not be a good fit. Maybe you got a broker that you team up with that you can send those kind of clients to. Maybe they don't do life insurance. They can send you some life clients. So it's a great opportunity where, that person might just not be a good fit. So really good point there, Adam. Thank you. All right, I'm jumping over to Jimmy. Jimmy, you're up next. Go.
Focusing in on the core clients for country and the pre-screening process.
Jimmy, I'm going to put you on the spot a little bit, but I can give you a lifeline. You know offhand what those core clients are.
Oops, something came up on my screen. So, one of them is families, homeowners, young families, and smaller business owners from 9 employees and under in the farm industry. But I don't have a lot of farming out here, so.
You hit all 3 of them. And yeah, I didn't have a lot of farm in Vegas where I wrote, so I totally get that, Jimmy. But farm is big, right, in other parts of the country with country. So yeah, nice work. Homeowners, business owners, and farm owners, core clients. So Jimmy, good call out. All right, hey gang, if anybody did raise their hand and lower it. I won't see it once you lower it, so I'm gonna jump over. I only see one more hand raised and then we'll move along. Bill, you're up next. Go ahead. Oh, Bill, you might be on mute. Go ahead and hit that little slash, the microphone on the top.
Yeah, I was gonna say, you need to ask your questions consistently with all of your customers. You don't need to change your questions, just because you may assume something. So you have to be very consistent in your questions for your customers.
Yeah, I love that. And Bill, why would you say that's important for maybe folks that are newer to the industry or newer to kind of this, this type of career?
Because it's easy to get in a hurry and skip questions, and because you may assume something that's not right. And if you ask questions, it opens the door to other things as well. So I think that consistency is really important because it'll help you with any. You don't want to have a lot of E&Os in your practice.
Love it, love it. Thank you, Bill. And really thank you all of you for sharing. I think you all get the point of this. You take a sense of pride in what you're doing out there, being those first line underwriters, bringing in good quality business, not only just for the company as a whole, but for you. You want to build a good quality book, right? And so well said, having a system in place, asking, consistent questions, all of that stuff you're going to learn over the next 4 weeks. Here at Country and through our different processes and different things that we'll share with you. But again, that allows you to do all these key points here on the slide, pick up red flags, this doesn't feel right. And when you're bringing in enough business, it allows you to take the seat of, they're not just interviewing you and working with you to see if they want to come over to Country, but you're working with the client to see if this is the kind of client you want, correct? So it's a huge thing. Now, a couple things here, and I'm going to touch on these next few slides quickly to get us caught up a little bit. Once you have a client that you want to bring in, there is a process around eligibility, company placement, and all of that's done with, we run in the background a credit-based insurance score. It's not a hard pull on their credit, it's a soft pull, but it's a part of the underwriting process, part of actuarial pricing and all that stuff, but it allows the client to be placed correctly based on the risk and what we're bringing in. It can be postponed, but again, that premium can change once you go and pull that. So if you do postpone it, just be aware that it could be adjusted once you get that credit pulled and see where the client's placed. Were they priorly insured? What kind of limits did they have? Consumer reports, different things like how are they using the types of things you're trying to insure. If I got a vehicle that's personal use versus business use, 2 different risks. So those are the kind of things that you're keeping an eye on and keeping a pulse on that allow us to put the client in the right place. Another thing is marital status versus long-term relationships. Bottom line is, it's just proven with some of the actuarial stuff and the math that married couples are going to be, viewed less risky. It just comes down from the claims results. And also part of that is they're usually going to have extra things being insured in the home, multi-car, multi-policy. So there will be some breaks for spouses that are coming with Country and being insured. But if someone's unmarried, you might see this a little more commonly. If someone's unmarried, maybe they're life partners, but they're not legally married, but they share bank accounts. They're both on the name lease. There's some mingling going on as domestic partners. Just keep in mind, they still need to be listed as operators on the policy, right? And some of that subject to credit can still apply, because if I'm living with someone, there's a good chance I'm going to use their car, they're going to use my car. There's still some transferring of risk there. So you want to kind of keep that top of mind and making sure that you're writing the policy correctly and accounting for all possible operators within the household. And that allows us really to, over the long run, stay profitable. Not just on the marriage or the commingling thing. I'm just talking about everything I talked about up to this point. And as a company, I'm not going to hit all of these and walk through what each of these ratios are. But the bottom line for those of you that are newer to the industry is any insurance company has to make sure that as they pay out claims, they brought in enough premium. And don't quote me on this. I'm just going off of memory. But I think, and maybe Charles down the road can tell me if I'm wrong on this, but I think, here at Country, we're just trying to make 1 or 2 pennies off of every dollar on the auto premium we're bringing in, right? So the loss ratios and the different ratios that we measure, are we hitting that mark? So we stay profitable, we stay solvent, and most importantly, the back the promises we make to clients, right? In addition to that, there are some, and you guys have a web-based training out there, so let's hold off on questions on any like bonus and commission stuff, because I don't like to get into that only because that changes from time to time, and your district leader will be the best person to talk through that. And that web-based training, though, will talk about some of the potential bonus incentives for my reps on the call when you hit a certain part in your career of being profitable, what that profitability bonus may be. So some incentives for you as a rep. In addition to, I think somebody mentioned this earlier, that as we're writing good quality business and we're really taking pride in that, and you're building the good books you're building in your communities, and we do that company wide, it allows us to stay in a competitive position and stay ahead of the competition, especially as it relates to our core clients, in addition to retention. So with that, I'm going to go ahead and I want to bring in Charles. Charles, if you're out there, you want to go ahead, give a little spotlight in. And a very important part of your team, gang, is the underwriters. Charles is a part of the underwriting team. Let's give Charles a hand for coming in and spending some time with us. He's going to start walking us through the auto part of today's discussion. If you have questions, you can give us a raised hand. You can throw it in the chat. But Charles, we sure do appreciate it. We know that you love teaming up with the reps, and you and your team do a great job. So Charles, anything else on the introduction you'd like to share? And then I might pop in from time to time to share more of a field perspective of some of the things you're sharing.
Yeah, no, I think you've covered everything really well so far. Yeah, my name's Charles. I've been in underwriting since 2021. And yeah, I'll just go over a couple of things. I think a good place to start is this underwriting manual, as you can see on your screen. So I'm actually going to start with sharing my screen just so I can show you guys how to access the manual that we're talking about here. Okay, and everybody should be able to see my screen now. This is the page that you most of you are probably familiar with at this point. This is agency news. To get to the underwriting manual that we're talking about, and what you can do is just go to agency resources, and under systems here you'll see passport. And so this is passport. Again, you might be familiar with this already too. But from here, you'll just go to insurance, and I'll go over how to go through auto and home. We'll just start out with auto. So under insurance, you'll go to auto, and then underwriting rules will be at the on the left side of your screen here.
Hey, Charles, let's pause for a minute. So Stacy, you're not seeing a full screen. I did take this off Spotlight, Stacy. Let me just take me off Spotlight. Let's see. Give me just a second.
Sure.
All right, gang. Did that show the full screen and not the screen? Let us know if you're able to see that now. Okay. Awesome. All right, back over to you, Charles.
Great. I don't know if you caught that, Stacy, but you know how to get to passport. From here, you just go to insurance, auto, and then underwriting rules will be here. I think you'll see my suggestion, and I cannot stress this enough, just bookmark this page. Really, I mean, as you can see here, I have it bookmarked. It's my very, very first bookmark, and it's my first bookmark for a reason. I access this literally every day, probably every hour that I'm thinking. It's really that. But from here, you'll have a drop down. Just I have all the states, but for you, I think you'll only see the states for which you're actually licensed. Just to keep it simple, I'm going to go with Illinois. Click go. And again, since we're doing auto, we do have two systems: the legacy system and then the pause auto system. We're talking about pause, so it's going to be the bottom set of links here. You can just click the link under current. And for Illinois, it's current as of March 14th, 2025. And these are the underwriting rules. This is the underwriting manual that I'm talking about. You'll see, I mean, it's a lot of pages, 137 pages here. And it's got a lot of information. My favorite part about it is that the table of contents that you see here is actually clickable. So let's say you had questions. Probably the most useful thing about this is for company eligibility. When you have questions about new business and why a client is in preferred versus mutual versus casualty, underwriting rules where you want to go. So let's say you wanted to look at what eligibility rules are regarding being placed in country preferred. You can just go here and click, and it takes you right to country preferred. And as you can see, we have a bunch of rules. If the client has to meet all of these requirements to be in preferred, otherwise they'll be in country mutual, so on and so forth. Another common question that'll come up would be something like the good student discount, which I think we might talk about a little bit later. And again, same thing. You can also actually, mention, if you don't want to go through the table of contents and you wanted to just find the good student discount, you can hold the control key and the F key on your keyboard. You'll see the find feature, and you can just type in good student, press enter, and there you go. It takes you right to good student discount. And then again, it tells you pretty much everything that you need to know. If the client is a first semester, it's their first semester in college, what GPA do we use? Well, we use the high school cumulative in that case. If it's their second semester in college, then as you can see here on this table, we use their first semester cumulative for as far as eligibility for good student. That's about it for auto. For home, it's much of the same thing. So I'm going back to passport here, except I go to insurance, go to home instead of auto, and then underwriting rules again will still be on the left. Same thing, drop down. I'm just gonna pick Illinois, again, just to keep it simple. And just like in auto, we have a couple links here. For home, it is separated by policy type, so whether it's condo, a homeowner's policy, rental condo, rental dwelling, or tenant policy, you'll see different links here. You just want to select the bottom settle link. I'm just going to click homeowners, and once it loads, you'll see that it's very much the same thing. It's a big document. It's exactly the same thing as the auto. The table of contents is still clickable. So let's say you had questions about the age of roof discount. Just click it here, and you'll see that these are all the different underwriting guidelines that we have regarding the age of roof discount, etc. And honestly, that's basically it. There's not much more to say about these. I cannot stress this enough. Please bookmark this. I think you'll find that if you have any questions about anything with underwriting, try going to these underwriting booklets first. You'll probably find the answer that you're looking for here. I'm gonna go ahead and stop sharing. Rob, I think you had a question.
Yeah, no, I'm just kind of jumping in here while we transition back to the slides. So Charles, thanks for walking through those. Again, put the deck or the links to each of those in the chat, you can bookmark them. And Charles, I'll hand it back over to you here. If you want to take back control of the deck. But that being said, Charles, the way I look at those underwriting manuals is not only just continuing to get in them if I were a rep and getting an understanding, but just in time help. As things come up, I can go to them, I can look at the situation. Because gang, you're not going to remember 100+ page underwriting manual off the top of your head. Underwriters probably don't remember every single minute little detail and changes. They've got resources they can go to as well to look at things and to be on top of things. So save those, just in time help kind of a thing. And I also want to encourage my reps on the call, pay attention to these resources, because as you build your team, start bringing in your associates, you want to have these resources on hand to really skill them up and show them where to go, teach them how to fish, essentially, right? So pay attention to some of this stuff, because this is going to be a good resource for you on a couple different layers there. So Charles, thanks again for walking through that. I'll hand it back over to you.
Yep. And I mean, pretty much what you said. It's again, in the end, what these manuals are, they're time savers. They'll help you save time. If you have any questions, go there. You'll probably find the answer. Now, you're not always going to find the answer, and sometimes even with these manuals, even though you have manuals to lean on, sometimes underwriting might still need to reach out to you. So actually, that's what we'll go over here next. So referrals from underwriting. You know, when you run a quote, let's say an auto quote on the personalized auto system, you do want to, you'll want to base it on a variety of information about the drivers and the vehicles. This does allow you to generate the most accurate quote possible and prevents any problems that can occur when the actual premium is a lot higher than your quoted premium. That is why we look at a person's claims experience with other insurance companies and what kind of limits that they carry, because data does show that clients who change insurance companies often, or maybe those who carry lower coverage limits, they typically submit more claims than the ones who don't. You know, they want to pay as little premium as they can and kind of let the insurance company pick up the tab when they're in an accident. So when you first quote someone, a report's run, current carrier is run to verify their prior insurance. This will pre-fill for a majority of the people that you quote. There are some companies that don't report to current carrier. AAA is a pretty good example of that. But regardless, if it runs, it's important that you verify that the information is correct. So if you have to manually enter this information, or if you override the information that we find on the current carrier when you run the quote. What underwriting will typically do is follow up with you. It'll generate a referral, and then we'll follow up with you. It's called a write back. The slide said it's called a referral, but we generally call it a write back. And the kind of referral that you see from us and the follow-up actions that you need to take will depend on the situation. If you manually enter information about the person's previous insurance company, like I mentioned, their limits or their expiration dates, then you'll see here on the right side of your screen, then you'll be asked to provide a copy of their declarations page to verify those limits, or a letter of experience to verify how long they've been with their insurance company. Another thing that you can change would be information about a claim. We also run a clue report. So if you change information about a claim that occurred with that company, you change an at-fault claim and you say, hey, this wasn't at fault, this was a hit and run or something, then underwriting will ask you to, most likely ask you to provide a copy of a police report maybe, or again, a letter of experience for that particular claim. Again, the document on the left shows you the situations that'll trigger a referral, the type of referral that will the type of write back that will result from that, and what documentation you'll need to provide to address that situation. I think next we'll need to address backdating, which we'll go over now. So backdating is a pretty important concept to understand for existing or even canceled policies. It's not something you typically have to worry about for new business. First question is, what is backdating? Backdating is when the effective date of a policy change is before the date the change is submitted. Typically, it's something that you'll request if you maybe need to remove or add coverages or a vehicle, maybe add a discount. Maybe you'll want to backdate to cancel a policy, make legal corrections, or really just change any other policy characteristics that affect rating. As far as what you need to do, I need to stress that backdating is typically the exception. It's not the rule. We really want you to submit the change effective the date you're actually requesting it. An example of that would be a situation where you have a client with a 16-year-old daughter. Let's say we'll call her Sarah. And your client says Sarah is a good student and qualifies for the good student discount. So you go ahead, you submit the policy change to add Sarah, and even before you have the good student discount application form that we would need to actually get her the discount. Sometimes what can happen is the schools may be a bit slow to get you to confirm Sarah's good grades. And if that's the case, what underwriting will do sometimes is we'll go ahead and process the change to add Sarah, but without a good student discount. So the quote that you would have given her gets added without is what the premium that the client will be paying will be higher now. And you know, we can only backdate up to 14 days. So if the school is slow to get the discount documentation that we need, then we're only going to be able to backdate X amount. The client will be stuck paying for a higher premium than what was initially quoted to them, which isn't really a good experience for anybody. You know, we try to keep this process as transparent as possible, and I think the next slide we'll talk about a dashboard that you'll probably find pretty helpful here. Yep, the policy tracker dashboard. This is a dashboard that enhances visibility into the underwriting workflow. Essentially, what it does is it tracks auto and home transactions that have been submitted to underwriting, which I think will be linked already. Okay, there it is. And you can access the tracker through the Enterprise Reporting Hub. There are color-coded sections that highlight policy statuses. So green will show right back that neither rep responds. Yellow will be the ones Yellow will indicate those awaiting completion in underwriting, and blue reflects recently completed transactions. There's also an explanation tab that has definitions, limitations, and contact information. And then the write back detail tab also provides a detailed view of any pending actions, which you can access by double clicking the green section. If you search click to know, just search policy tracker dashboard, you'll find more information on that. All this really can help you minimize errors and answer any questions you might have, which might reduce calls to underwriting, which is obviously an important thing to do, and I think that's what we'll talk about next. Yeah, reducing calls to underwriting. It's pretty important for you, and honestly, for me, the underwriter, for reps, cutting back on calls to underwriting means, well, you get quicker responses to your actually important questions. You can get policies issued, you can get policy changes done faster, which is a win-win. That's for both you and the client. If you're able to save time on the more routine stuff, then you can focus more on serving clients and even chasing down new clients if you'd like. Plus, being able to handle common issues on your own, makes you feel good, boosts overall customer satisfaction. What's even better than that? I mean, if you're figuring things out on your own, it makes you understand the nitty-gritty of underwriting guidelines. Makes you an even bigger expert at your own profession. And when you use resources like Click to Know, you're always learning and growing. As far as for underwriters like myself, the fewer calls, the fewer unnecessary calls that we get means that we can actually dive into the more complex cases, the ones that actually would require us to review the policy on a deeper level. We could really focus on sorting out the tricky stuff and making sure everything's running like a well-oiled machine. By freeing time and attention, we can handle the tough issues with ease, work together to solve problems. Bottom line, I mean, cutting calls to underwriting is a win-win for everybody involved, from reps, me, the company in general. And if you use the resources that I've provided you, that will be provided to you throughout this training, then I think we'll do a good job towards doing that.
Yeah, thanks on that, Charles. And you can keep control of the deck and pop to the next slide as we transition. And yes, Ari, the different trackers and dashboards we're showing you in new rep training, not just for today, the stuff that Charles covered on the auto home side, but also you'll see some stuff on life and things like that. That's all access that you all have as reps in your agency. So good to go there. So we're going to shift now into just some of the coverage pieces. But Charles, I like how you walked through the process. And what all our reps will, what you'll find they settle into over time is having a process in place, getting familiar with it. You're bringing a client through it. The better you understand it, the better experience it is for the client, right? Now, part of that is going to be understanding some of the product itself and what's out there. So let's go ahead and Charles, if you want to walk us through a couple of the product features, that'd be great.
Yeah, as far as this, this chart, let me make sure, yeah. This chart shows how some coverages, are required, are prerequisites to carry others. So for example, if you want emergency road service, then you have to have bodily injury as well as comprehensive coverage or collision coverage. You can't have emergency road service coverage and not have collision. Also, if you write a certain limit for bodily injury on a policy or property damage, med pay, or death benefit, then that same limit applies to all the people on that same policy. You can't have differing policies. It's just one of those things that whenever you write something, there are certain requirements that you have to do. Moving forward, I think it's pretty likely, speaking of writing, that you'll be writing antique vehicles at one point in your career. So that's what we'll talk about here. There are pretty unique criteria that define an antique vehicle with country. You can see that on your screen here. To qualify as an antique, a vehicle has to be at least 25 years old, has to be assembled and operable, well maintained or restored, primarily used in exhibitions, shows, or parades, etc., and driven less than 1,000 miles a year. It's, I guess, one thing, and I think we'll talk about this as far as age. Well, actually, we'll get to that here in a second. When you do antique vehicles, something that underwriting will ask you to do whenever you write an antique vehicle is to provide photos of the vehicle, and these will typically be 4 color photos of all 4 sides of the vehicle, a photo of the engine, and a photo of the vehicle interior, including the dashboard. Something to consider when you're writing antique vehicles is that we can only do this if we insure all the other vehicles in the client's household. So if, I don't know, there's a household member of yours that isn't with country, we're not actually going to be able to write your antique vehicle either. The coverage that we provide is on an actual cash value basis. So if they want something more than that, like stated value coverage, then you want to work with brokerage probably. Haggerty, I think, is our go-to for stated value coverage because they can provide better coverage levels that address this type of situation. Next, I think I'd like to touch on auto endorsements for a moment.
Hey, Charles, before we jump along, let's go back to the antique there. And let's see, Ari asking, is there a limit on value? So Ari, you might have to come off mute there, 150,000. So I think some of those larger risks, Charles, probably through brokerage, but if you want to expand on that a little bit. So Ari asked the question, is there a limit on value? And then Adam followed up with 150,000.
Yeah, 150. I'll be honest with you, I'm not actually sure that $150,000 limit applies to antiques. I would think it does. But 150 is the magic number as far as what we consider a high value vehicle. For standard vehicles in particular, you're not able to write anything with an MSRP of over 150,000.
Okay. And then Vincent, anything on your end as you get your hand raised?
Yeah, just to clarify on that, when you're saying that we only do ACV on those, who assesses that ACV amount? Are we looking at a book amount or are we using pictures?
Yeah, that's determined at the time of claim. Yeah. So the claims adjuster would be who really determines that.
Okay, because in the case, say someone has a 69 Chevelle, just throw that out there on that. Yeah, the body and all that may be done and all that, but they may have put $40,000 just in the engine on there. Yeah, granted, you never get out what you put in those type of vehicles on that, but if they were to sell it, that car still may go for $75,000, $80,000, just market value, or they assessing it at what the market demanding for that type of vehicle, or they just saying, well, according to the book, these cars should average this, and that's about all we're getting. That's kind of where we're touching on ACV on there.
Yeah, I don't know how that's determined exactly. I think that would be more a question that should be posed towards a claims rep. But yeah, so
And Charles, if I can jump in, so Vincent, good question. We will have an hour and 15 minutes with claims through your New York training program. So that's a good question for that. And I would say if you do have a client, and Charles, keep me honest here, if you do have a client that's looking for a more robust coverage and something a little bit more expanded, Charles, you mentioned stated value, and they just want to be a little extra careful with it. That's where we have a great brokerage option for some of the antique vehicles. So it's not like, oh, you're taking it through brokerage. That's a great option for those special cases where it is, I jumped $50,000 into the engine. Well, maybe this isn't a risk that we want to write through the country. We want to go through brokerage, through Haggerty, or maybe it's a more simple antique vehicle and, and it doesn't need as complex of, ACV would be fine. So Charles, anything else on that?
no, it's exactly like, if you want stated value or anything like that, then typically go through brokerage and they'll, I think, refer you to Haggerty's.
Great option there. Good question, Vincent. So hang tight. Let's come back to that on the claims session that we have here sometime this month. You bet.
Cool.
Over to you, Charles.
Okay, cool. We'll talk about some endorsements here, starting with uninsured and underinsured motorists. First question you might have, what does or UIM cover? Essentially, that covers bodily injury when you're involved in the claim with somebody who doesn't have insurance or doesn't have enough insurance. It's estimated that 1 in 5 drivers don't have auto insurance, which means that obviously even more carry only the state minimum. States will determine if drivers are required to carry and UIM, and 2, if they can reduce or remove the coverage so that it's lower than their policy's bodily injury limits, or remove it completely. When drivers want to reduce or remove this coverage, then you'll really just want to make sure you explain the possible consequences of doing so. You'll almost always, most of the time, need to obtain a signed or UIM waiver from them and submit it to underwriting so that you can so that the request can be processed. The requirements from this related to or UIM can vary from state to state. So you'll hear me say this a couple of times throughout the session today. You can check your underwriting manual to learn what requirements may apply in your particular state. UM and UIM provides coverage, and again, protects somebody when they have little to no coverage. But the next coverage that we'll talk about, UMPD, covers damage to their property if caused by someone with little to no coverage. So we'll talk about that next.
Yeah, Charles, if I could jump in when you're transitioning to the next slide here. I love the UM, UIM in class. I want you, as you dig into more of the coverages and the details, as Charles said, the UM, UIM, somebody gets in an accident and the other driver is at fault, they're not insured or they're underinsured, that coverage kicks in, helps take care of bodily injury for me, people in my car. But the nice thing about that too, gang, is as you're looking at a competitive advantage, and Charles, I always like to bring this up with more of my rep hat on, you're always looking at an apples and oranges approach, because what you're going to find is the coverage somebody has, if I'm meeting with someone and they've got state minimums 5,100 and they're just like, give me the cheapest price, sometimes I got to educate them a little bit, and it's an apples and oranges thing. And I'm saying, hey, here's what you're getting with us. Boom, boom, boom. UIM being one of those, right? They might not have it somewhere else. And so when they say, well, wait, Rob, why are you $30 more a month? Well, which coverage is going to give you the most peace of mind, right? This with all of the coverages we're offering in country, or the bare minimum we have over here. So just kind of keep that in mind as you're picking up some of these different coverages Charles is talking about, because it can really set you apart from what you're competing against and what you'll find a lot of people have. And so Charles, just thought that would be a good thing to throw out for the group to keep top of mind as you're hitting a lot of these important coverages.
Yep, of course. And so, uninsured motorist property damage, again, provides coverage to your vehicle if you're involved in an accident with somebody who has no coverage or just doesn't have enough coverage. UMPD is coverage that we provide up to the limit listed on the endorsement. Again, it's actual cash value of the vehicle or the cost of repair or replacement, whichever is less. Typically, coverage does apply when damage results from actual contact with an identified uninsured vehicle. State differences, however, could apply, especially in regards to hit and run situations or phantom vehicle claims. Again, you'll want to refer to the state's underwriting manual. Go to your underwriting rules to determine how the endorsement applies to your particular state.
Yeah, Charles, if I could jump in on this one. If your state does offer it, gang, I think I'm out in Washington and I have it on my card. It's like $3 or $6 every 6 months. So it's not super pricey on this one. And again, might be important for those clients, especially depending on the situation and the age of their vehicle. Adam, the reason I wanted to stop though, Charles, Adam, it looks like you might have a question. Anything you wanted to ask?
Yeah, so is it safe to advise people based on that 1 in 5 number, basically saying, hey, you can pay a little extra per month, but if you decide not to, any given accident you might get into, there's a 20% chance that you're gonna end up paying a whole lot more because that coverage isn't on your policy?
So, and Charles, if you have any thoughts on this, but since that's more of a client engaging thing, I don't mind taking that one, but I would speak more in general terms, or maybe talk to your district leader to find out if there are any specific state numbers that are more accurate. That 1 in 5 is probably more general across all states. But if I were in your shoes, something along the lines of, hey, you know what? There are a lot of people out there that don't have enough insurance. We know that. There are a lot of people that don't have any insurance at all on the road. And this is what this coverage can do for you, right? And bringing it back to a storytelling type thing. So I would approach it that way. In addition, just maybe, talking to your district leader and saying, hey, picked up an interesting stat and new rep was curious if we know specifically, what that number might be here in, it looks like you're out in Oregon and they might have that top of mind or maybe a resource you can go to. But if not, I think speaking even just in general terms, saying, hey, a lot of people, up to, whatever, 1 in 5 generally, something like that. So you're keeping it a little more open-ended.
Thank you.
Yeah, because a lot of people aren't aware of that, Adam. Yeah.
Yeah, I mean these coverages, I think you'll see when you start looking. They're really inexpensive. I mean, they're really, really inexpensive. It's just typically a good idea just to have. Okay, moving forward. Here's a list. Some more common auto topics that we, I guess, didn't really go over. So anyone have any questions about anything that we see here?
And while we're pausing on that, Charles, gang, tomorrow we'll talk about a phrase called, lowest, most accurate quote that really stacks discounts on the auto side and puts you in a very competitive position. So we'll talk a little more about that tomorrow. And then again, your web-based trainings really dive deep into the discounts and the endorsements. So get out there, check them out a little bit. We could probably spend a whole week just on auto if we wanted to, given the product itself.
Okay, and I guess, Rob, were you going to go over any updates here regarding the social security numbers?
Yeah, why don't we take control so I can take a peek here, because I want to make sure I touch on a few things. So before we move into some competitive advantages, group, one of the things that we wanted to just give you all a reminder on is Social Security and that individual taxpayer identification numbers. So that's what those acronyms are. So here we had some updates at country, and starting with the first wave on March 8th. Now, let me give you the update here. Going to definitely need to have that Social Security number, that tax identification number, to bind that coverage, to push that quote through and get it bound and get it issued. And the reason for that is it just allows, as over time, the company more accurate client data. It goes back to what I was talking about a little earlier. Getting the right data on the client to put them in the right risk. right? So we're collecting the right premium. So you all won't know any different essentially because you're coming in from scratch. But this is an update we made recently in 2025. So essentially, best practice, making sure to get that social security number or tax identification number to get that application and that auto policy pushed through. And let me go ahead and share with you the first wave. So I'm just going to go ahead and read out who's in this first wave. And if I don't call out your state, then you know that that second wave is coming July 12th in terms of this being required. And we will drop a link at the end. Click to know where you can go out and type in, just have the social security requirements details out there. But right now, this is in effect for, and I should say new auto and home policies, not just auto, but new auto and home policies. So the states that it's in effect for: Alabama, Alaska, Colorado, Idaho, Indiana, Iowa, Missouri, Tennessee, and Wisconsin. Okay, I'm going to say that again. So the states that it's in effect for are Alabama, Alaska, Colorado, Idaho, Indiana, Iowa, Missouri, Tennessee, and Wisconsin. So hey, this is business as usual if you're in one of those states. If I didn't call out your state, or maybe you're licensed in multiple states, just know that the second wave will start July 12th, and that next wave will cover your state if I didn't mention it there. So keep that top of mind. It's all good stuff. It allows us as a company to stay on top of things. And again, that accurate data, which we know is huge for any insurance company moving forward. So with that, Charles, I'll hand it back to you, and we can jump into our next part of today's session.
Cool. Yeah, we'll talk about competitive advantages next. There are a couple things here, starting with the keeper. So the keeper is an endorsement that can really benefit clients, especially because, quite frankly, a lot of insurance companies don't actually offer this option. What the keeper provides is 100% replacement or repair or replacement cost coverage on cars and light trucks. It can be added if the qualifying vehicle age is equal to the current model year or the 2 prior model years, and can remain in coverage when the vehicle is 4 model years old. What I was going to talk about earlier was with regards to vehicle age, is that we consider October 1st to be when the model year goes up. So as of right now, your 2025 vehicles are considered 0 years old, but come October 1st, your 2025 vehicles will be 1 year old, and your 2026 is going to be 0 years old. Again, competitive advantage. Most of our competitors don't actually offer anything like the keeper on their auto policies. If your clients don't understand how keeper claims are settled, then they might assume that they'll automatically get a new car when they wreck their current one. You'll talk about this more in regards to the with a claims expert later, because it's not the easiest thing to explain. But here you'll see some examples of how the endorsement would work depending on the type of damage. A question that you'll get is whether the keeper is the same as gap coverage, and it's not.
Hey, Charles, if I could jump into, so class, thank you, Kim, for the shout out. It's a very competitive endorsement. And class, claims will actually walk through all this, give you some scenarios. If this happens to the client, they have this kind of loss, here's what would be the outcome. So Charles is just kind of teeing this up a little bit. And Charles, great coverage for a lot of clients out there, especially with those newer vehicles. And I love this one. Just wanted to reinforce what you said there, that more to come on this come our claims session here sometime in the next few weeks.
Yep. We'll switch over to another important topic. I think medical payments coming up next. Country offers strong medical payment coverage. And as far as what medical payments cover, is payments for medical expenses incurred by an insured within 2 years from the date of a covered auto accident, with the exception of Idaho, where it's 3 years. As far as the competitive advantage, we offer up to $100,000 in medical payments coverage per person. A lot of our competitors only offer up to $25,000. Something that you'll get a lot when discussing MedPay with your client is, I already have health insurance, so I didn't want to talk to you about how to respond to that. Medical payments, in some cases, your PIP or personal injury protection, so Kansas, Minnesota, North Dakota, Oregon, and Washington, it's PIP. Everywhere else, it's MedPay. MedPay and PIP will pay for funeral expenses. Health insurance won't. It'll pay for expenses for 2 years after an accident. Again, 3 years in Idaho with no annual deductible, while health insurance obviously would require clients to meet a deductible each year. MedPay again will cover 100% of expenses up to a set limit, while your health insurance typically leaves the client responsible for a certain percentage of the total expenses, up to a maximum out-of-pocket cost. And then the last one's actually a good one that I didn't think of. It pays for injuries to your uninsured passengers in your vehicle. Just when talking about MedPay, it's important to remember these talking points. Depending on the accident, the cost for medical care in this country can be pretty significant. I don't think that'll come as a surprise to any of us here. And you might also want to let the client know that they have options. For example, selecting $50,000 in MedPay coverage could be pretty beneficial. And the premium difference from $5,000 in coverage to $50,000 can be pretty small. You might want to consider running 2 quotes to see just how a little bit of premium can buy them a good bit more protection. I don't see any questions, so shifting gears a little bit, let's talk about vehicle rental. If your clients are if your clients are like me, I don't have a spare vehicle. So, if their vehicle is being repaired for a week or 2, their options can be pretty limited. They'd have to borrow a car, take a bus, or maybe for their kids to practice, which can be a pretty big inconvenience. The vehicle rental, what it provides is we offer $40 a day up to $800 total. When a client's vehicle is undrivable following a covered accident, emphasis on covered accident, so a repair can't be, vehicle rental won't apply if they need a rental because of a mechanical breakdown, or if they're just going on vacation and they need a rental vehicle. As far as the competitive advantage, the coverages that we offer are better than what most of our competitors offer. Claims will work with clients to get them in the best vehicle possible. So, if they're involved in a claim with their full-size SUV, then the rental vehicle we're going to put them on will be a similar size. It won't be, we're not going to put them in a compact. And the cost of coverage is just pennies a day. So yeah, it's very cheap. I just quoting it. I see a hand raised, Kim.
Yeah, just wanted to jump in here because it was such a common question for me when I was in the field as an agent. And so if you're new to the industry and you don't know the answer to this yet, it's going to come up, not only will they ask you if they can use this coverage for when they're on vacation, but the next question will be, well, do I need to take the rental car company's coverage for my insurance? Or will my insurance cover this? So just wanted to level set that a little bit so we are all on the same page there. With your clients ask that question, just let them know that, if you are renting a vehicle, yes, their current coverage that they have for the personal vehicle would apply or could apply if they do damage that vehicle that they're renting or, using. But the caveat there is that those rental car carriers will have per diem charges that we will not cover under a country policy, or any other carrier would not cover that. So the loss of use, whether it's Avis or Budget or Enterprise, doesn't matter. They're going to be charging, your client a daily charge for any time they cannot rent that vehicle out to someone else. That will not be covered. But if they damage the vehicle and have liability, that would be covered the same way they cover a personal vehicle, right, Charles? So I like to make sure people understand that, just so that you can have that, because that will be a common question that you get. So that's it.
Cool. I think we've got home next.
Sure, yeah, Charles, and gang, hang with us for a minute. We've been going for a while. I do have a few questions in the chat that I want to touch on before we go to break. So thank you, Kim, for the explanation there. Charles will rapid fire these. Brett is asking, do these limits change if the vehicle is deemed total? Going back to the vehicle rental.
If the vehicle, no, it's going back to vehicle rental. Do the limits for vehicle rental change?
No, so going back to the last slide you were on, so kind of that topic, the vehicle rental, that one there, she asked, do these limits change the 40 a day up to 800 if the vehicle is deemed total? What plays out there if it's not a repair type thing? It's like, hey, it's total loss.
Gotcha. No, it's still $40. We don't have any other options.
Okay.
$40 a day, $100 total.
Okay. And then Adam's asking there, Charles, typical rental limits for other carriers. I'm not sure offhand. I would assume somewhat similar with a cap per day and a cap total, but I'm not sure offhand. Like, oh, this company has this, but any familiarity there, Charles, on general industry line?
I know Geico used to cover. I know Geico had a couple options. It was $30 a day, $600 max, and some. Yeah, Stacy. I'm sure it's different. So.
Yeah, thanks for that, Stacy. Stacy saying the per day max. So yeah, probably out there, Adam. There's a few things. What I will say, gang, is on this one, offer it to them. I put a note in the chat, but make them tell you no, because what's going to happen is come claims time, they're going to think they have it, or wait, you didn't tell me. So always bring this up, always offer it, and make them tell you, hey, I don't want it. Claims will get into this a little bit too, because even if they have multiple vehicles in the household, Charles, right? They get in an accident on vacation, visiting family, and now they're down to one vehicle, and the vacation's really messed up, or they got to now rent a separate vehicle. So there are scenarios where this is still going to come into play, even if there are multiple vehicles in the household. Ari asking, would you explain what trip interruption is?
Vehicle rental. You're talking about vehicle rental and trip interruption. It's okay. So it's split into two pairs. Vehicle rental is limited to a maximum of $40 per day. Trip interruption are expenses only payable when the vehicle is disabled over 100 miles from where it's principally garaged, up to a maximum of 72 hours. I think you'll get. Yeah, there you go. So it's expenses. It's transportation, lodging, and meals. They're only payable when the vehicle is disabled over 100 miles from the place of its the policy location. So if they're disabled essentially over 100 miles from when they're at.
Perfect. Yeah, good question there. Ari and Kim added some additional pieces there. Ari, no, not mechanically on that. Charles, I'm assuming we go back to it needs to be a covered loss, not hey,
you got it.
My engine broke down or something like that. Yeah, you do a claim, Ari. Yep. So got a couple different components there. Good. Okay, bet. All right, we've been going for a while, Charles. Thank you. Hey, Charles is going to stay with us, but let's give Charles a hand for helping us out on the auto side. So get the reaction emoji there on the top. Charles, thanks for walking through the auto. Let's go ahead, Kim. What are we thinking break-wise time? You got a better gauge here. Do we have time for 10 minutes? Do we knock it down to 8 to come back for home? What are you thinking?
Yeah, it's 10:32 Central Time right now. It's going to click over to 33. So let's go ahead and come back at 10:41.
Okay.
10:41 Central Time, and we'll resume and go through the whole completion of credit for these courses with us. Okay, so as we move forward and go to the home side of our product lines, I want to point out that our product for home has gone through a few different changes these recent years. So you might hear it referred to as different things. Currently it's called Homegrown. That is our system right now, or the new system. It's also referred to as the Personal Lines Property System. So you might also have heard of Legacy Home, which is our previous system. So for today's purposes, we're just going to refer to it as our home product. But I wanted to level set that just so you guys understand that it's all the same thing that we're talking about right now. It's our home business. So you might come across those other terms from time to time. So let's take a closer look at why we've made these changes in the home system, because our new system is really designed to be competitive and offering the discounts and coverages that really are important today. They're designed to attract and retain core clients that are within our markets. So our PLPS, or the modern system, uses technology that allows us to lay a strong foundation and really kind of keep country products kind of set apart from our peers in the industry, taking care of our core client base. So we have a lot of advancements and investments in this space to kind of keep pace and really be competitive here. So we'll take a look at what those look like as we move forward. To start off with, for those of you who are new to insurance, it's all kind of new to you, let's just level set on what dwelling coverage is, because there's going to come a time when you have a client that says, well, wait a second, I just bought this house and this is a $500,000 house, but you're telling me it's only going to cost $300,000 for my insurance? Well, yeah, there's dwelling coverage, right? And then there's market value. So we want to make sure that we understand those are different, right? We can't insure the land, and the land value might be drastically different depending on the location, right? So let's discuss a few different coverages. There's going to be some ways to make some, suggestions to your clients on how we can protect their home, which is often their most important asset, right? So we're going to be able to cover it for additional replacement costs. Okay, think of that as your guaranteed no cap replacement cost, right? This is the best of the best, the Cadillac, so to speak, of our ways of covering the home. The extended replacement cost, also a superior coverage. This is going to be 120% of the dwelling value, which means that it's going to be more than just the stated value on the declarations page. All right. Actual cash value, that is not going to be seen too often. I would never recommend that to a client unless you're then talking about maybe a builder's risk, where actual cash value is the way to ensure that more expensive exposure, right? So as we move forward, I just want to kind of level set here. Again, we're talking about dwelling coverage. So we're looking at the home itself, or the structure itself, and what the cost is going to be to rebuild or repair that home, and the fixtures attached or affixed to that house. So think of built-in appliances, plumbing, conditioning systems, electrical, permanently installed systems, right? And again, it's important to understand the difference there of that and the market value. So when it comes to the ways that we do this, I also want to point this out. We must keep or have the owner occupied home first and foremost. So if a client comes to you and says, can we insure my second home or my rental home? Well, sure, as long as we have your primary home, right? And this is really for you too. It's going to be more money in your pockets and a better experience overall if you can insure all of the homes that your client has and not just their seasonal homes. All right. And this is going to be for homeowners or condo, as well as rental. So if they don't own maybe their main dwelling, maybe they're renting like a house or an apartment as their main, but they also still own a secondary home, that's okay. It doesn't really matter how it is, as long as we have that owner occupied dwelling. Okay, are there any questions, Rob, that I should stop, pause here, or do we have any other?
I think we're
questions
good.
on this slide?
Stacy asked about the difference between additional and extended, but we'll get into that on another slide. So I think we're good to go and all caught up, Kim. So we're good to move forward.
Okay, cool. So I was trying to be fancy and use my speaker and it wasn't working, so I put my headset back on here. But you guys can hear me okay? All right.
Yep.
Cool. So moving forward then, let's talk about roofs for a moment, because unplanned events are going to happen, and storms, as we know, are frequent, and there could be hail damage to roofs, and this has kind of become a real big talking point when it comes to like a key element of the home system. So when it comes to how losses are settled, it's going to be something that you're going to want to have really established with your clients. They have the expectations up front on how this is handled. So Roof age, we'll talk a lot more about here in a moment. Just kind of to level set homes with brand new roofs. Just think about this. For the new roof discount we'll talk through in a moment, is it really a discount, or are we paying more to replace a brand new roof than an older roof, right? So this is where the conversation kind of comes into play over time. Roofs have become quite the expense, I think, for carriers, and why this is a big focus for us to look at. So new roofs installed in accordance with manufacturer specifications by an actual contractor, we're going to need to know that. So when your client says that they just got a new roof, you're going to want to get that paperwork, or the expectations, or what actually occurred there. What's the roof material? When was it installed, and who installed it? They're going to want to know all of those things when we go to get that new roof discount, and when we're going to pay out more money to replace that roof. Okay. Existing roofs that have been removed. So here to see like no overlay other than the metal roof there. So I guess, Charles, I'm going to hand this back over to you, Verona. You're the expert in this area. Can you jump in here and tell us more about the significance of roof age and what we should be telling our clients about this?
Yeah. So going to the next slide here. Wind and hail losses are really one of the biggest impacts to profitability. You know, as roofs age, they depreciate. They're generally more susceptible to wind or hail losses. So what Country's done, we'll cover clients on an actual cash value for basis for losses in a wind or hail claim situation, instead of providing full replacement costs on an older roof at the end of its lifespan. It's this type of approach really aligns with what's becoming, as I understand it, the industry standard. The depreciation schedule, you can see here on the left side of your screen, really allows for a more appropriate payout in the event that a loss happens if the client has an older roof, and honestly just provides transparency into how much a client can expect to receive in the event of a loss. You can also find the schedule in your state's underwriting manual. Adam, I think, has a raised his hand.
Yeah, I'm just curious if they're like in the middle of their policy and they get a new roof but completely replace it. Is it based off of what they have when they wrote the policy, or that'll be updated as they've got their new roof?
Good question. If they update their new roof in the middle of their term, you can just submit a policy change. We'll require documentation for that. In fact, actually, I think the next slide will talk about the age of roof discount. So
it doesn't change anything on a premium basis, though. That's all kind of set as is when the policy is written.
Good question. No, it would actually.
Okay.
So if you change your roof year, you're subject to whatever changes, whatever premium applies then. Steven?
Yes, if that roof is done by the homeowner, can you still consider it manufacturer specs if they do it by the actual manufacturer of the architectural shingles and put that on, or does it have to be by a contractor?
Good question. Again, next slide will actually cover this too. I believe. So yeah, you're just ahead of me by a little bit. But spoiler alert, here you go. Yes, if they did the work themselves, they just need to submit a paid receipt. So yeah, it's allowed. But yeah, this slide is the age of roof discount. It's probably one of the more common discounts when you're talking about home. Probably, I would say it's the most common discount that that you deal with when it comes to our home product. And missing the types of requirements that we have for this is a common reason for the write back. For a dwelling to be eligible for the age of roof discount, you'll need to submit the application for the age of roof discount, or again, Stephen, if they did it themselves, paid receipts showing the materials that they paid for, something along those lines that kind of outline the work that's completed, either from the roofing company or again, if they did it on their own. We'll also ask for pictures of the roof, two opposing corners, as you can see in this picture on the left. Okay, loss settlement election forms. So what we're going to focus on, and somebody had a question, I believe it was Stacy who asked that question there. Form 3 comprehensive. Essentially what it does is limit of liability, the limit of liability is not subject to a maximum amount and applies to the location insured. So no matter what amount of liability we have on the declaration stage, additional replacement costs will, I think you might hear your mortgage companies refer to it as guaranteed replacement, or I forget the term that's often used. 4 and 4 is extended replacement cost. Still gives the client added protection. It's 120% of the stated limit of liability. Depending on their premium tolerance, extended replacement cost might be a pretty good choice because it offers a lower premium than additional replacement costs, of course. As far as exceptions, then there is an exception here in that if the location insured hasn't been their primary residence for more than 60 consecutive days before the loss, then even if they have additional or extended replacement costs, that is reduced to standard replacement costs. So just something to keep in mind. And for the 90-day notice topic that you can see here, please let the clients know if they're planning improvements that might increase their replacement cost coverage by 5%. They want to let us know that we can so that we can make adjustments to their policy as appropriate. This helps us provide seamless protection in the event of a claim after the work is done. And finally, there are specific dwelling criteria that do have to be met for each loss settlement form. Again, please visit your underwriting manual so you can see it there. Do we have any questions? I don't see any questions. So moving on, I think we'll talk about scheduled personal property. Some property is special limit, but clients might want more protection on specific items. Your most common ones are listed on screen. Your jewelries, any Pokemon cards that the clients might have, something like that. For scheduled items with increased limits, if you do schedule items, the clients will have coverage for risk of direct physical loss. That's our open barrels policy, generally with no deductible, subject to any exclusions, of course. In certain situations, underwriting could apply a deductible when the policy is issued or renewed. So let's say a client has frequent claims for loss or damage to an expensive cell phone, and we see that you're trying to schedule their iPhone. Well, then we might make the decision, it's a subjective decision, to go ahead and add a $250, $500, $1,000 deductible to the risk. Vincent. You're muted, actually. Sorry.
No, yes, I'm sorry. I'm trying to get the mute off. No, just a question, because it didn't occur to me till after we just flipped to this next page on what we were talking about as far as the coverage on the home itself. For the dwelling, are we counting everything that is above grade, or are we also including basements as well?
For you're talking about in the valuation, in the estimated replacement cost?
Correct.
Yeah, that's the entire dwelling. So basement be included as far as the estimate for the home. So just whatever it takes to replace them. All right.
And the reason why I was asking that, because some don't know, I know they don't know how it is in a lot of states, but I know here in Missouri, they will not count your square footage on your basement if it is not connected by what they consider the finished part of the home on there. So sometimes a lot of times it's not considered that. I'm not sure why, but some companies do, some companies don't, but we will, if they finish 800 finished square footage in their basement, connection or not, it's still going to be considered part of that coverage on there for them.
Yeah, so your basement square footage, Kim, I don't know if anyone can help me. Have they worked with the valuation tool yet?
The valuation tool has not really been introduced yet for training. This is the first session.
Got it. Okay. So what you'll see with the valuation tool, and there's not really a way for me to show you this, but what you'll see when you enter in the square footage in our valuation tool, there's a little question mark that'll tell you, hey, what you include. It'll tell you don't include basement square footage here. So if they have an 800 square foot home above ground and then they have a full basement, put 800, then put 100% basement, and that'll account for the home.
Yeah, and we'll have that today, in a few slides. On slide 51, you'll see that in today's session as well. Just a little bit like a preview of the valuation.
Okay. You guys are just ahead of me today, so sorry. Did that answer your question though, Vincent?
Yeah, that is.
Great. Where was I here? Okay, yeah, just talking about, underwriting might add deductible to scheduled personal property. Excuse me. There are also appraisal requirements, that you might need to ask the client for upfront. Current documentation typically be asked for, the appraisal no older than 5 years if needed. So your underwriting manual will give you specific information on appraisal requirements based on the item and value. Just checking. Moving on. Okay, the animal risk endorsement.
I'm so sorry about that. I was going to take control here if you don't mind for a second.
No, go ahead, yeah.
Yeah, no, I'm really excited here. I'm sorry, I did that. Just dealing with the different endorsements that we have. I know that animals specifically can pose such a big risk for our clients. And so I was just hoping maybe we could talk through a little bit of Country's home policies aligning with the current industry trends. So our policy defines specific animal types that bring greater risk and honestly the injuries and losses that can be severe from these animals. So Country does not want to charge all of our clients for the small number of those that do have the greater risk with these animals. So that's why we're going to talk on this just a little bit. I think is important. And you can all refer to your underwriting manuals for a full list under each of these categories. But when talking with clients, it's really important that they thoroughly answer all of the application questions regarding animal ownership accurately. We're going to want to know the breed, the history of any bites or injuries from these animals, and Country really does rely on you as the rep to get this kind of accurate information up front when we're taking the application. So it's important to accept or to understand there are exceptions depending on which state you're in. So just know, which state you're in and what your rules are, which again, going back to that underwriting manual that I know Rob dropped earlier into our chat, but also using Click to know if you have questions there. But now I'm going to hand it back over to you, Charles, to tell us more about the animal risk and the other endorsements that we should highlight today.
Yeah, so the base contract home policies, Homegrown provides a $10,000 supplement for liability and medical payments for any dangerous dogs, aggressive breeds, and exotic animals, unless of course an animal exclusion endorsement, which we'll talk about here in a second, has been added. It also excludes medical payments, as you can see on screen here towards the bottom left of your screen. That's pretty important for those clients who maybe rent out part of their home. Now, the animal exclusion endorsement excludes all of these ineligible risks so that the insured and the property can continue to be covered, but any losses attributed to the animal won't be covered. So it's important for the clients to understand that if they have the animal exclusion endorsement, that losses attributed to all other animals owned by or cared for by the insured will also be excluded. So it's not just for the the dangerous dog or aggressive breed. If you have the animal exclusion endorsement, it applies to all animals. Just a common question that comes up. Again, if there are topics related to animal risk, there are some states that have specific differences compared to the information that I've just presented. So I feel like I'm a broken record here, but yeah, just look at your underwriting manual. There are some states that have laws specifically regarding animal exclusion.
Hey, Charles, I'm going to pause. I do see now that we have a few questions that I missed in the chat from a few minutes ago. Did we already address Stacy?
Okay.
Sorry, we already addressed Stacy's.
Yeah. Stacy's on. Yeah, I think that was an answer to Vincent's question. Adam, limits on scheduled personal property. No, but if I believe there's some sort of limit if you have like but something, I think $500,000 in scheduled personal property, then underwriting might have to ask you for additional documentation. But no, there's not, I can't think of anything where there's a hard limit as far as how much stuff the client will cover for the client stuff. Does this apply only at the residence, or does it include off-residence coverage? I believe the animal exclusion excludes everything. So yeah, off-premise is included.
Okay, thank you for pausing for those questions.
Yeah. I think we're good to move forward here.
I think so.
Okay.
All right,
Okay.
so everyone give me a thumbs up if you have ever used an Airbnb or a VRBO. Go ahead and give me a, yep, I'm seeing some thumbs up. So I imagine all of us have used one of these services by now, or at least have heard of it. Right? So many clients of yours are going to want to earn income by renting out their home or parts of it. So this home sharing endorsement can make it really easy to talk with your clients about how this coverage works and how they can be protected from loss as long as they have this endorsement. So Charles, why don't you talk to us a little bit about this endorsement and some highlights to keep in mind?
Yeah. So the home sharing endorsement is available on the insured's residence and covers both sharing economy and your long-term room rental. So if the client owns a duplex or a multi-family occupancy home, and maybe they live in one unit and then rent out all the other units, then what you want to do is write a home owner's policy and then add the home sharing endorsement. So yeah, again, for example, they live in the bottom unit and then rent the top unit to a graduate student or something. What the home sharing endorsement does is it removes the business limitations and exclusions under the base contract for personal property and liability and med pay for rental situations. What's important to note here is this note that you see at the bottom, which is the theft exclusion. So even if the policy has coverage for the theft peril, the clients won't have coverage if a theft occurs in the rental area of the home. But the exception to the exclusion is if that they chose our open perils policy. So risk of direct physical loss on personal property, then the policy covers that. Just a thing to note. Moving forward, the watercraft endorsement. So the base home policy provides pretty limited physical damage coverage for watercraft. It also excludes most watercraft liability. So adding the watercraft endorsement to the home policy is really what you want to do if the client has any sort of watercraft that they'd like to insure. As with everything, to be eligible for this endorsement, and certain underwriting guidelines do need to be met. For example, there's typically a 200 horsepower maximum for personal watercraft. Underwriting will also, for what it's worth, will review the 5-year loss history to determine eligibility. So, if the client has had a few watercraft claims, then there is a possibility that we say, hey, sorry, you can't add this endorsement to the policy at this time. The endorsement also provides coverage for emergency services depending on the situation, and it's available when the covered property is within defined coverage territory. Again, any differences, just check it. Much like we did for auto, I think next we want to talk about home competitive advantages. I guess I'll just keep going because I don't see any questions.
No questions. So yeah, the online courses that Will took in your pre-work should have included a product training home basics, which gave you a great foundation, I would say, for understanding these home coverages, right? So it's going to include our endorsements and our discounts. So just like with auto, like you said, we're going to dig a little bit deeper here with Charles while we still have him on the line. And I want to encourage you to continue to use the chat for any questions that come up as we are going through these next few slides while we still have Charles with us, okay?
And Adam.
All right.
Yeah, I just want to confirm on watercraft, that could be anything from full-size boat up to that limit down to even like a paddleboard.
I don't know that I've seen a paddle sport before, to be honest with you,
I'm
but,
more thinking kayaks and canoes and that kind of thing, but paddleboard being kind of the lowest tier in that kind of realm.
yeah. Again, there are certain limits, like we have, I don't know what the length limits are, but there's a watercraft chart that should be available to you in your manual. Just check that out as far as the eligibility.
All right, are we good? All right, so let's look at some key benefits that you can really leverage as you work with your home prospects and your clients. Okay, so our home products, you're gonna really love, I think our clients will love the flexibility of our coverage options. So not only that we can adjust the limits, but also the deductible amounts. So depending on your client, they might be more tolerable for a higher deductible to keep that premium down, right? It's nice that we have that kind of flexibility. And I would also say that our products are also very affordable and competitive within the market. So we can help clients meet the needs while keeping an eye on their bottom line. So for core clients, our prices and premiums will be really competitive. Being able to reward with those discounts, multi-policy discounts especially, but protecting their property and reducing these claims. So on the screen here, you're going to see a list of the discounts available with our home product line. And these discounts will help us stay competitive with those core clients, as I mentioned. But keep in mind that depending on your state, some discounts might not be available. For example, the welcome and loyalty discounts are not available in Washington or North Dakota. So you need to, again, a broken record, be aware of what is applicable to your state. And finally, we could not have the competitive home product without having a strong system. So our system really has streamlined the processes for faster quoting, being able to evaluate or have the evaluation tool at our fingertips. So when I first started as an agent here years ago, there was multiple websites I had to go through to get the fire information, right? To get the different, resources to put together my valuation. So it's really nice that everything has been put into our valuation tool here, like truly going to modernize things and give you good visibility and be able to more efficiently quote these things. So as you put together these quotes more quickly, using the data that we get to the third-party valuation tool, the most important thing I could stress to you is to validate it. Make sure it's correct. Just because it pulled the information in on the square footage or the year built, doesn't mean it's accurate. So you're going to always want to be working with your client to ensure accuracy as you put together your proposals for their insurance. Does that make sense? And having a positive application experience, right, is going to enhance that client experience. So it's going to really just make sure that you are quoting accurately, and setting everything up properly to bill accurately. And like when it comes to homes that have the mortgages, you're going to want to understand that up front. Like, how is it going to be billed? Because it's going to affect the premium, right? So the e-signature process will also launch automatically, very streamlined in our new system. So the takeaway here is that the property system is going to save you time so that you can spend more time building that relationship and ultimately selling, right? So with that, I just want to talk through just the rating model that our property system really has now and how it's really modernized the way that we do business. So rating can be super tricky, right? So I'm really glad that I've got Charles still on the line to kind of chat through a little bit of a simple overview of our rating system and the client risk profile here. So Charles, back to you.
Yeah, the foundation of the rating model really starts with how country uses data to offer more competitive prices for our low risk clients. We're also a bit more transparent about what actually impacts the premium. With preferred pricing, we use rating variables that reflect the needs of our core clients. So each client's rating will really be unique to them based on specific characteristics. Almost every type of data can be used to impact the rate. Age, number of mortgagees, the coverage selections, the structure components of their actual dwelling. And because the client's rate is segmented to align with their situation, then it's really important that we collect and enter accurate details from the clients up front. So, because any changes that are made to the quote later could impact the rating variable, which could then impact obviously the premium. As you can see, there are a lot of variables making up the pricing segmentation that we pull from multiple data sources. We rate as a ground up and granular level. So on screen, you can see some examples of that. Again, this type of approach is aligned where technology is really heading industry-wide, and actually has a lot more benefits for country and our clients. It really helps us align the rate and the premium a lot more closely with the dwelling and the client situation. Next, we'll talk about wildfire risk score. This is a variable that not in all the states. It only applies to the states you see on the screen. In the property system, if you have a score of 80 to 100, then it indicates a high risk of loss due to wildfire. This type of risk assessment is based on factors used by a third-party service that we use to generate the score. Something to keep in mind for Washington, wildfire risk doesn't technically apply to Washington, but we're still able to account for it by using ZCTA or your zip codes. Depending on the state and the score, country might deem these risks objectively ineligible. So if you feel like you have a home that has a higher score than what the risk represents, I'd encourage you to just send a manual underwriting evaluation. Last thing to note, fire protection and wildfire risk scores are two different rating variables. So, for your fire protection, it's primarily your proximity to a fire station. And while that does factor into wildfire risk score, it's not one of the leading factors. So, yeah, they're definitely two different things. Moving forward, I think we're going to be talking about the valuation process.
Yeah, I think this is what they're all waiting for, right? We've been talking about this valuation tool. So let's go ahead and get into that a little bit so we can help develop some good processes around giving our clients a good experience.
Yeah, so I think there's a new rep. There's system training in the new rep training program. So I'll just cover some highlights here. The valuation tool pre-fills the property system with dwelling characteristics from a third-party source. We do encourage you to review the valuation results with clients. We call this, you'll hear it, validating the valuation. This will ensure that the dwelling details are correct and complete. Screens are pretty easy to walk through. You can also download or print something for your client if they'd like to see. When it comes to validating the valuation data, if your client's unsure about specific details of their home, then you want to just go with the pre-filled results. But we do encourage you to follow up and make sure that the information is accurate. On the opposite side of that, if they're positive that they know that the pre-filled characteristic is wrong, and they're able to provide what the correct information is, then you want to go ahead and trust your client and use the information that they have. You can obviously do an on-site visit if you want to look at things like roof condition, a recently remodeled kitchen or bathroom, any detached structures they might have. You might want to do that. And I forget who it was. I think Vincent, this is what I was talking about, this little question mark that you see next to total finished square feet. That question mark, that'll tell you it excludes finished or unfinished basement area and built-in or attached garages. So just what we talked about. But again, you can do an on-site visit, and which actually might be required in case you need to take photos for underwriting purposes.
Okay. So, quick question from the chat. Christy, did you get your question answered? Was your question referring to sharing the valuation with the client?
I guess I was under the assumption that we couldn't, so I just wanted to clarify that we could actually print those and share them with clients.
Yeah, I think there's a way that you can print the valuation.
Yeah.
I can print them. I was under the assumption that you couldn't share those with clients, so I just wanted to be really clear on it.
Yeah, there was a change several years ago that I know what you're referring to, Chrissy, where we're not supposed to at least be sending these to mortgage companies or third
Right.
parties, but I was never privy to the fact that we couldn't share it with our clients because we want to make sure
Okay.
it's accurate. So I would say that that's something that would be new to me if we couldn't share them with clients.
Okay.
Ari?
Sounds good. Thanks.
Yeah.
Question as well.
Yeah.
So in regards when I'm working on evaluation, let's say it's a client getting ready to close and the loan is higher than the valuation.
Mhm.
And then they ask me for this report because they're
Mhm.
supposed to honor it.
Correct. So that is what we're referring to there, to where, there was a change, and maybe Rob can speak to this, but several years back, there was a change to which we were not supposed to be sending these valuations to the actual mortgage companies, but rather than assuring the mortgage companies that we are at or over 100% of replacement cost for the home. So Rob, do you know what that change was officially, and if it's effective in all states or if it's differing?
Maybe we can look into that, Ari, because when I wrote, it was years ago, and we could send it out. So that change might be due to privacy reasons, like Kim said. But one thing I would recommend for the whole group to do is when you are working with mortgage lenders, if you are building your COIs, definitely explain your process and reassure them, some of the things you're doing to make sure that their clients are properly insured, because they don't understand, right? Oh, the loan amount, Kim mentioned this earlier. Well, the loan amount on the home includes land value and everything else. And so there's more, it's a different thing, right? It's apples and oranges, but they may not get that. So I understand where you're coming from, Art. It's like, well, hey, wait a minute. You guys are only insured for 300 and the loan is 375, but if we've done the valuation correctly, we should be in good shape. So Kim, I would say, why don't we do that as a takeaway? And maybe tomorrow when we're back with you all, we can get that figured out and get an answer for you on sharing it with the mortgage companies. But in the meantime, I do think when you're onboarding or building your relationship with your centers of influence, it's really important to kind of walk them through your process generally and reassure them that the coverage you're providing is going to be for what the client needs based on that rebuild and whatnot.
So just to summarize that, we are not supposed to send the replacement cost estimator. Because it is something that I have referenced to them. Like, well, remember, we are insuring the structure of the dwelling. We are not insuring the land that it's on. And they're like, okay, well, as long as it's within, I think, 20% of the loan, then we should be fine.
Yeah, Kim, I can't speak to whether they can or can't send. I want to look into that before we make a promise, but sorry, so hang tight for a minute on that. But Kim, anything else there you want to add before we just double check and make sure?
Yeah, we'll get you to the official answer of what we learn on that, by tomorrow. But the one thing I would say when working with lenders is that oftentimes, let's just say the other auto carriers of our industry, someone would say, I'm just going to go with my auto carrier for my new home purchase. And oftentimes a loan would fall apart because the auto carrier would only be doing actual cash value, or they'd only be doing, a certain thing like that. So in those cases, if it's something that's actual cash, it should be apples to apples with the loan value. But if it's replacement cost, it should not have to be the entire loan value, as long as you are over 100% of that replacement cost estimator. But there's something did change years ago, and I don't know if it's all states, which is why we're not going to get back to you till tomorrow on this. I don't know which states are applicable on this, but there's something did change where we're not supposed to be sending those RCEs out. I just can't speak to that right now until we look into that. Okay. All right.
Okay,
Charles.
I'll try to go through these quickly, because I think we have a few more. From one of our black belt projects, we found that there were some specific dwelling characteristics that were more consistently incorrect in our new home application, and that when not properly validated by the rep with the client, The situations often resulted in, additional write-backs or maybe additional calls to underwriting. That's what this slide addresses. The 9 key dwelling characteristics in the screen top half are found only in the valuation section when quoting, and in the blue lower half, you'll see that there are 4 characteristics that appear in both the valuation and the application itself. So 2 different places in PLPS. The issue with the 4 characteristics in the bottom is that they don't automatically populate from the valuation to the quote application. So you'll just want to make sure that the information you put in matches on both sides. Again, these are going to be addressed, I think, in an online course you'll be taking later. And there's a lot of help inflicted on regarding this. So if you have any questions, I've got a few resources at your fingertips. Moving on. Let's see. Okay, so we have, MLS photos. Within PLPS, we do have automatic integration of third-party MLS photos for dwelling in the building valuation. That means that you need to go on site and actually take the photos yourself for a new property will be reduced based on the availability of photos for that specific property. When you get to the building valuation, there are photos available for the address. They'll automatically appear on the bottom right of your screen, kind of like you can see here. Keep in mind that we're only allowed to use photos that are automatically integrated through our current vendor. So there are proprietary restrictions that prevent us from being able to use online photos from other sources. In other words, can't use if the photos aren't available in the valuation, you can't just go to Zillow and say, hey, here's the Zillow or the Redfin, use those photos. We do ask that you take them yourself or maybe even have the client do it. A couple things to keep in mind. They're not available for all the property. For every property you're going to quote, it's going to be 50-50 about. And again, if there are no photos, then you'll have to get them yourself. And you are the frontline underwriters. So we do ask that you review these MLS photos for any eligibility concerns. There might be occasions when even if they are available on the valuation, you might want to still visit the property anyway to assess or obtain additional photos yourself. Next, we'll talk about relatively new development, which is aerial imagery. It's now integrated into the quoting process within PLPS. Adds new data that directly impacts policy eligibility and routing. This enhancement actually improves risk assessment and helps streamline underwriting. But for it to be effective, you really need to understand how it works and what to do in different scenarios. So I'll just go over a couple key points here. First, you should expect aerial imagery to return data for about 90% of the property, which is similar to how MLS photos are used. However, there are cases in where an image isn't available, and that's what we'll cover here. The images themselves will be accessible directly within the quoting system. So it's important for you to know where to find them and how to interpret the data that they actually do provide. All you really have to do is just go within the building page in the quoting system, and then there's a link. It says, I think, view aerial imagery, or view aerial image, I think, is the link. If an image isn't available, then you should follow the PLPS guidelines. So this could mean using alternative data sources or maybe moving forward with just your standard underwriting steps. Key limitation, I don't know if any of you guys are in Alaska, aerial imagery isn't available in Alaska. So if you're quoting in that state, you'll want to verify property details through other means. Beyond availability, we'll assess roof quality and liability risk based on the image that it receives. This means that about 23% of applications will be routed to underwriting for further review due to roof conditions that we get. And it's estimated, I don't know how current these numbers are, but estimated 4.5% may face wind or hail restrictions or may be deemed ineligible based on what we find. couple other things. It'll pre-fill application questions for pools, kind of what I talked about earlier, in the last slide. It'll pre-fill application questions for pools, solar panels, and detached garages. So, obviously, you'll have the opportunity to, review this information and disagree if needed, and provide any updates to, or make any changes, as needed. Last thing.
Charles, due to time's sake, if you want to just quick hit this one in the next slide, I just need a minute to wrap up. Main takeaway here, Charles, on this, which one of the reps to take away?
Attached document. Really, that's it. Just attached documents, just when it's required, just, you just go to attachments and do it. It's pretty self-explanatory. There's not much to go.
Perfect. Hey, let's give Charles a hand, everyone. The reaction emoji, let's give him a hand. Give him a heart emoji for coming in. Charles, thank you so much for helping us out. We sure do appreciate it. And I know we're wrapping up quickly here, so I just wanted to give time to do some wrap-up slides, but you and your team are sure appreciated, and thank you again for helping out.
Thank you.
You bet. All right, all the resources can be found in these links. I'll have Kim drop some links, everyone. And then, hey, gang, real quick, when we're done today, take a look at your inbox. For my reps on the call, my financial reps, insurance agents, you should have gotten an email covering Olega. That will take you out. You know, you'll see an email, your field learning specialist, Courtney, Angie, or Andy. Olega gives you a chance to do risk-free practice where you can practice videoing yourself delivering the scenario that you're given on hand. And then you could look at it, watch it, critique it yourself, and then hand it in. So check it out. And what you'll see is in this link here, and I'll leave this up as we close out, this will take you out to the actual sales lab, which is the Olega platform. But for this today, for this activity, we want you to go ahead and explain, giving an explanation around auto insurance in an easy and effective way. You'll get a chance to play and watch the video scenario and what you're being asked to do. You hit the record button. And then when you're done, you hit submit or finish. You'll have the draft, so you could watch it. And then when you like it, you can click hand in, and that'll go to your field learning specialist. Risk-free practice. Those that use this technology are showing higher on the country club contest, which we'll talk a little bit more about here in the coming days. And even if you're uncomfortable seeing yourself on camera, just get comfortable going through it a couple of times. You'll get used to it. And I would say you'd rather see yourself and critique yourself now versus when you're working with the client. And your field learning specialist will be a great resource on that. So with that, I'm going to stay on the line. If anyone has any last minute questions, Kim, thank you. Group, thank you. I know we're a minute over. We'll see you all tomorrow on the next one. And stay tuned. Thanks all.
Cool. Thank you.
You bet.
Thank you, guys. See you tomorrow.
All right. It looks like Ari's saying she has unauthorized access. So Ari, is that for the wildfire PDF or is that for the links above?
This is underwriting rules. I'm gonna click on that.
Oh, for the links. Okay. Go ahead, try here.
Yeah, it could be,
Yeah.
is anyone else getting the same
No,
message?
we are. I'm getting unauthorized too, Kim, on that. So why don't we try to repost that? Some of them are working and some of them aren't. So, all right, it looks like the auto rules, home rules, I'm getting that, but maybe on some of the other ones I'm not. So we'll go ahead and get that reposted with refreshed links. If not today, tomorrow, since we'll have all of you tomorrow morning, and we can get that put back in the chat box if that works for all of you.